We've got people coming in. Hi, everyone. I see everyone is starting to stream in. I have enabled the chat options. So please, as you come in, say hi, welcome yourself. Oh, I mean, welcome everyone. Introduce yourself and tell us where you're from, where you're dialing in from as well. We've got Craig Sumption from Hatch Africa on the line. He's dialing in from Joburg, as well as me. Kaylin, I am the managing editor at CFO South Africa. We've also got Tim Rudman and Ola. Ola, please help us pronounce your surname.
Sure, absolutely. It's Oyetayo.
Oyetayo. So Ola and Tim are both, thank you so much. Ola and Tim are both for dialing in from London, where it's apparently very cold at the moment. um, awesome. I'm just going to give everyone a second to come in, and then we'll get started. Um, just to let everyone know, if you are not seeing chats from each other, you can just go to your chat settings. You will see a little two text with a little option, a drop-down option. You can just select host and panelist so that we can all see. There we go. Hi, Ntombi. Hi, Amanda. Hi, Richard. How are you all? Great. So I think we're going to get started because we've got quite a bit of people in the room and we don't want to delay any further. Welcome everyone to the CFO South Africa webinar, which is sponsored in partnership with, or is hosted in partnership with Verto. Tim and Ola is representing them for us, and Craig and I are representing the CFO South Africa community today. So in the ever-evolving world of finance, CFOs in South Africa face a unique set of challenges when it comes to international payments. The intricacies of managing cross-border transactions can be costly and complex, impacting organizations' financial health. But it's time to revolutionize the way we approach international payments and secure a brighter future for our companies. And Ola and Tim are here to share the way to that future for us. And we'll start with the keynote. Tim, do you wanna lead us in?
Sure. Thank you very much. Hi there, everyone. I'm Tim Rudman. I'm the COO of Verto. I'll introduce Verto a little later in the presentation along with our products. But just for the sake of reference, I've worked in the payment space for 16 years now, and I'm keen to try and explain how we view the SA landscape a little bit better. I wanted to say just a quick good morning from a cold and wet southeast England, and I believe Ola's sitting in. Ola, who's my colleague and chief executive officer of Verto, is sitting in London today, and the rest of you, I believe, are all in South Africa. So, yeah, I just wanted to firstly share congratulations on the Bokke win. Some say Damian Willems is still partying somewhere, and Faf is still in his speedo. Hopefully the Proteas can pull it off, but from all of us here in England, we really want to commend the Boks on their win. And secondly, just to say that I've unfortunately, and Ola will know this, I have quite a bad chest infection, so please bear with me if I cough and splutter through this presentation. At least I'm a continent away, so I doubt that any of you will get infected. So just to dive into the cross-border payments landscape, and I think, it's unique because we have perspective of living and working abroad from South Africa. There are obviously a lot of challenges when it comes to cross-border payments in South Africa. But just to look at some of those challenges that businesses face, I'll break this down into a few sort of main categories, and these are in no order of priority, but there really are about 5 different categories that I've sort of viewed when I'm thinking about the nuances that face the South African market. I am South African originally. I have a vast network of friends and family who are either CFOs or chartered accountants in some of the bigger auditing firms, and I've sort of taken both a look at what we view from outside of the country, but also listen to a lot of the issues that people face in the country. And the 5 key sort of areas that I think are most prevalent to CFOs in South Africa and businesses in South Africa at the moment are cost, complexity, the speed of payment and the speed of settlement, access, and then trust and education. And I'll break these down into each of their different categories in a second, and just explain a little bit more about how they affect the South African businesses who are trying to do cross-border payments either inwards or outwards of the country. So when it comes to cost, there are obviously significantly high fees. Banks charge very high fees for a number of reasons, and I've broken these down into a few different areas. So firstly, mostly the fact is that banks have a monopoly in South Africa when it comes to FX and cross-border. They need to make profits, and they make generous profits out of this area. It's a fairly opaque area, and while we all know that banks in South Africa banks in South Africa know how to charge for almost all their services, I think when it comes to FX and cross-border, it's still an area where people don't really understand the nuances of the spread, of the costs, etc., and how much the banks are actually making out of each transaction that goes across. And I'll explain this a little bit. I think I've mentioned here, I'll give an example a bit later in the presentation when I talk through our product. The second reason that I think is quite important is that the banks have a large back office and they have large infrastructure costs. So they generally have, the banks in South Africa, particularly the big 4, they have monolithic applications, systems, processes, people costs, and they're very expensive from a unit economic perspective. So they almost have to increase their fees when it comes to cross-border to actually service the client, just because of their clunkiness. That's an important part that I think people don't normally take into account. But just because of their overheads, they generally have these costs associated. So in order to make their net profit, they need to charge high fees. And then when it comes to the actual payment, there are lots of intermediary banks along that chain that get your payment where it needs to get to. And often these charges are what they call shared charges and not covered charges. It's a very important thing as a finance director or a CFO or even the inputter of payments to ask your bank to cover the charges that get sent. And the reason for this is that what they normally do is they send those payments out and the intermediary banks take a charge along the way. And what happens then is that the end amount of money that gets to your beneficiary or your supplier or whoever you're looking to pay, or vice versa, if it's coming to you, you get less than what the invoice amount generally was, and you need to then go and try and figure out how you're going to get and recoup that those funds. So it's quite important to know the differences between shared payments and covered payments. And I think that is an important part that people don't realize when they're sending those funds on top of the exorbitant fees that you're already getting charged. And I will give an example later in terms of, obviously we in partnership with CFOs South Africa, and, we want to show our solution and how we think that we could save you money. So I'll definitely give you an example to sort of explain that a little bit better, a bit further down in this presentation. In terms of complexity, everyone on this call will know that South Africa is a little bit nuanced. There are a few countries that still have exchange control solutions in place, and that makes life a little bit more complex for everyone. The amount of reporting that we need to do, the onboarding process is a little bit more clunky. Banks need to report certain things to the South African Reserve Bank. You know, they're different sort of channels. If you're doing inward investment or outward investment versus import export, you know, they're different approvals that are needed, and I think that makes life more challenging. There's obviously tax compliance. Obviously, SARS are probably one of the best in the world in terms of collecting money, and they want to make sure that they get, you know, their revenues from the tax side of things. And so there's, you know, there's a big emphasis on tax compliance when transferring funds in and out of the country, making sure that things are legit, which is, you know, I suppose par for the course, but also, you know, given the level of scrutiny that SARS puts on those transactions, it just makes things a little bit more complex. And then, you know, you have everything that everyone else has across the globe in terms of compliance, AML, KYC, sanction screening, etc. And then I suppose the third issue is around speed. And this is quite an important one for South African businesses and South African CFOs. You know, obviously, as I've mentioned above, exchange controls and the documents that are required for those approvals, you know, they take time to get through. Tax compliance, tax certificates. Then you've got the intermediary banks who slow down the speed of payment, and those all factor into, I suppose, what is a very volatile South African exchange rate. You know, the rand moves. I think it's within the 8th to 10th most traded currency in the world. And a lot of that transaction volume happens offshore, which means that, you know, the exchange rate is super volatile, which means that you as CFOs, it's nigh impossible to hedge your balance sheets and to budget properly. You know, you have to almost be superstars to get that completely right, and it makes it a lot more difficult than I suppose a more mundane or slow-moving G10 currency, and that makes that incredibly difficult for you guys. So speed of execution is super important when it comes to ZAR. And then I suppose the next two are more around things that are probably not seen as much from a South African CFO point of view, or you know, it's an access and education point of view around you know, what options are out there. So from an access point of view, you know, SMEs in South Africa find it hard to get access to good service and good pricing from the big banks. You know, someone like Rand Merchant Bank, or, you know, some of the bigger banks, Investec, you know, it's quite hard for an SME to go and register with them, go and onboard with them and get the access that, you know, a large corporate would get. And so they left to go to more of the commercial banking sector, which is obviously higher fees, slower times, less customer service. You know, and that makes life difficult for SMEs to operate in South Africa when they're doing import exports, some of the smaller players. You know, so access is a thing. The core banks still hold the majority of the FX. So I'd say 75 to 85% of FX is still done through the big banks, which means, you know, going back to my point about the monopoly, you know, they generally hold the vast majority of all FX transactions, and that, you know, not through manipulation or anything like that. It just sort of dictates the sort of price and the spread that people are charging. And I'll get into this in a second in terms of our product, but it's around, you know, 1.5 to 7% on the higher level, which is enormous if you're considering that, you know, let's say 1.5 to 7% of your income is taken away by just an FX rate, so, or an FX spread. In terms of access, again, you know, you would normally register or onboard with an individual bank, which is difficult to connect with. You know, there's obviously a massively moving and changing landscape in terms of the products that banks offer, and you know, their products are quite tied. You know, they are not nimble, they're quite fragmented, you know, they're difficult to connect with. I spoke about it a little bit earlier around the monolithic landscape of how they look and how they interact. And, it's very difficult for a product team to go in and try and change those aspects in the bank to try and make it more SME and more consumer focused. We're talking about more business to business here, but even on the consumer side, it's quite tired and quite difficult to change those systems and processes and their technology. So, they've got to do a lot of retrospective and introverted sort of look into themselves and how do they facilitate that. And a lot of times, these bigger banks, and we've seen it more and more in the UK and in the States, that they're starting to buy fintechs to just take care of those situations for themselves, even though we're using their rails. So it's a bit of a catch-22 for them, but rather than have to go back and change their infrastructure now, they sort of looking to fintechs to try and solve those problems for them. The next point is around currency availability. So, certain banks may not have all the routes to market. They may not have all the currencies that you need. And if you onboarded with a bank, they may have a select amount of currencies that you can pay out or get inward payments from. And sometimes that's quite narrow. And for a business who needs a certain payment, or if you're looking to expand, it can be costly to you because you'd then have to go out and find another bank who can facilitate, those payments. There's a costly onboarding process. It takes time. Yeah, the market moves constantly, and if you want to grow your business, it makes it ever so difficult if you're just stuck with one, I suppose, incumbent bank. And then the last point around access is liquidity. So, some banks have limited access to liquidities, particularly in emerging markets. And I think that, some of the solutions that we'll demonstrate in a second, allow us to be able to service those markets better. There's certain restrictions that banks face when it comes to EM, which make it challenging for them to access that liquidity. And these are solutions that fintechs are, hell-bent on trying to solve, particularly Verto in terms of emerging markets. And again, in Africa is our core focus. So yeah, any questions around that, we'll happily take on later on in this presentation. Excuse me. And then lastly, and the fifth point is around education. So I think fintechs are largely a new concept, or a newish concept, should I say. I know that they've, the catchphrase has been around for a long time, but the adoption has probably been a little slower than people would like, particularly in South Africa. I think more needs to be done around building trust around fintechs and their infrastructure. I suppose in essence, when it comes to a fintech, apart from some of the newer rails that fintechs are starting to use, they traditionally use banking rails anyway, and they're also regulated in most instances. So your money is pretty much safe. Most of the regulators require some level of safeguarding of money. Particularly in the UK under the EMI scheme, it's a very onerous regime in terms of safeguarding money, which means that your funds are kept separate from business and operational accounts, and there are a plethora of different types of audits that audit this to that effect. From the banks to the PSPs that we use to the regulators, we always in one or other audit, to make sure that we are safeguarding customer funds correctly, that they're completely separate, and that if anything happened to us as a business or any other fintech as a business, that those funds are still there, and that we don't have access to them. And I think that has become a massive focal point for the regulators and banks over time. And so, there's more and more trust filtering into that market as we go along. And then lastly, the point of a fintech is that we take a whole bunch of the best solutions and package them into one, so we have a much better front end. We take the best parts from the banks, from the service providers, we consolidate these, and ultimately want to give the customer and the client a better experience when they transfer their funds, and give them the products that they need to really focus on their core business and worry less about the financial aspect of cross-border payments, as they go along. And we really look to try and partner with the business to help them. We take their feedback, and then the solutions that they need are generally brought to the table. And as we grow with them, we start offering solutions that customers really need, rather than trying to predict what they need and then giving them something, or just building something for the sake of building something which is not necessary for their use case. So I suppose that's a short introduction or keynote to start off with. As I said, I was going to just give a little bit more intro to Verto itself. So what I'll do is I'll just share a short presentation in terms of what Verto does, and then we'll move into the panel discussion. Can everyone see my screen?
I can see it.
Cool. So in terms of Verto, we are, sorry, let me just try and see what, okay. So who we are, Verto is a cross-border payments platform for businesses. Our mission is to simplify cross-border payments in emerging markets. We have a special focus on Africa, so particularly Africa, and we do this by providing businesses with superb infrastructure to collect, hold, convert, and pay out in multiple currencies. In terms of the South African payments experience, I've mentioned a couple of these before, but really there are three key things that we want to pull out, and some of these are sort of commingled with the 5 points that I made earlier. But currency exchange volatility in South Africa is obviously massive, right? The exchange rate moves constantly. As a South African myself, I know this. I have property in South Africa. I send money home quite regularly as a consumer. But for businesses, you can obviously understand the impact that this has, almost on a daily basis. There's something that goes on, whether it's from a political speech to factors like the Ukraine-Russia war, to what's happening in Israel and Palestine at the moment. It all has an impact on the rand, and it makes it really difficult to predict and budget for SA businesses. And so, speed is really important, and managing that complexity is really important, and that falls into the regulatory environment that we said. What we look to try and do is minimize the regulatory burden on South African businesses. I think banks have taken too long to adopt and adapt to the fact that the process is quite cumbersome. As a fintech, we have product people focusing relentlessly on trying to improve that process. So when you need to onboard as a CFO, you need to exchange funds. We want to try and make that process as seamless as possible by upfront document collection, making that process seamless, trying to collect documents from bodies that already hold those documents for you, where we can, on an automated basis, pull those documents from the various entities that we need to, so that it means less time for you processing or collecting those documents. And then obviously costs, and I'll go into the cost side in a second. I think I'd mentioned that I'd give an example of just how much we can save. But obviously costs are a massive factor, and we have the luxury as a fintech of being bank agnostic. we have many different banks, and we have many different PSPs that all connect into our system. So we have the luxury of choosing the best price and passing that on to the customer. In addition to that, we, as a fintech and as a payments business, obviously aggregate volumes of currencies. So when we're executing transactions against the bank, we're doing that in volumes of scale, which means that we are processing large volumes of payments in one lump sum, which gets us a better price. And part of those, the volume of payments would be, your transactions, which means that we are able to pass on some of those savings to you. We obviously are a business. We do want to make money ourselves, but we just feel that, we need to be fair in terms of the transaction. And given the fact that we process large volumes of transactions at one time, that saving is something that we're happy to pass on to the customers, in addition to the good experience that they get through the process. And then fees, just to give you guys some numbers in terms of what it costs to do a transaction. Every time you're doing an individual payment, you're looking at 400 to 750 Rand, even more sometimes. That's $30 to $50 per transaction. And if you're doing, let's say, payroll or something like that, these volumes add up. They cost that you probably don't notice all the time, but they do add up. And then the big fees are really around the margins that banks charge. And I think we've said 2 to 5%. I think realistically maybe 1.5 to 7% is what they're charging, which is a massive fee on converting currency. And unfortunately, the hardest hit here are SMEs. SMEs come into this fold. They don't have great transaction histories. They haven't made the banks the revenues that they need to meet their thresholds. So they basically focus on trying to take advantage of the sort of incremental cross-border payments that they're doing, and they really charge a steep exchange rate on those. And then just for interest, sending remittances from South Africa, there are obviously a large amount of remittances going out compared to the average. It's 9.3 to 6.8, and it just shows how much the banks are making off these transactions. In terms of the examples of the real costs, so I've given an example here of transferring 10 million Rand with your bank, and this is out of the country. At a average exchange rate of about 3%, you're paying about $20,000 in terms of fees, which in effect is a systematic process of getting funds out of the country. There's not much, that goes into the back end of this. It's normally a process that, they take, and at the same time, they're charging you $20,000 for that transaction, which is disproportionate to the amount of work that needs to actually go into that transaction. And in Rand terms, I don't know what the exchange rate that we used here, but it's around 300,000 Rand, which is a massive sort of cost to pay just for transferring your funds to pay a supplier. In terms of a fintech like Verto, we obviously a lot cheaper. I mentioned the reasons for that. We are a more nimble organization. We have less back office costs. We use automation in almost everything that we do, and we are agnostic of banks, so we can choose the best banks, the best price, and we have flexibility around that. In addition to that, as I mentioned, we're aggregators, so we have large volumes of currency going through us at any one time. And because of that, we have better buying power in terms of the price that we can dictate. And largely these transactions can be done directly with the banking FX team that we're talking to at the time. And so we can get a better rate to pass on. So, on average, and I'm not going to say the exact numbers, but on average, you can see the numbers on the screen in terms of, the types of savings that we could achieve. It may be slightly higher, it may be slightly lower, but it's a lot better than what you'd get from an incumbent bank using them going forward. And in addition to that, you'd get a better service. And then just quickly, because I'm conscious of time, in terms of the product suite, and I mentioned this, sometimes the banks have, various products. Some of them are fragmented, some of them don't work, they don't support your business. Fintechs are generally there to go in to talk to businesses like yourselves, talk to CFOs, financial directors, managing directors like yourselves, really understand what you guys need in terms of what makes your business tick and how we can take care of some of those issues from the treasury side of things. And we built a product that will allow us to focus on many of the different types of areas that would really advance your business without you having to build something that's not core to your business. So I'll talk through a few of them very quickly. So firstly, the collection side of things, we have a variety of solutions. We can collect payments in up to 25 currencies and from 40 plus countries quickly and securely. We can open USD, Euro, and GBP accounts in minutes. This is not yet prevalent to South Africa. It's something we're working on in terms of working with the Reserve Bank and some of our partner banks to be able to open local ZAR accounts which connect with these. We can open local ZAR accounts for yourselves at this point, but we're still building that into our product and something that we look forward to delivering fairly soon. We obviously have local accounts in different territories to reduce, local payment fees, multi-currency wallets, and then also payment links to allow you to collect funds seamlessly by just sending a link via text, email, WhatsApp, or the likes. You can send out that link, and it gives the ultimate payer an opportunity to pay you very seamlessly. And we can talk more about that in the question time if anybody has any questions. And then conversion, obviously, I've spoken about this. We can, exchange at a preferential rate in a plethora of different currencies. We have a marketplace option for more of the liquid currencies where we have a pairing system. Some of the clients that I'll mention in a second utilize this marketplace product fairly well. And we are probably in Africa, the de facto business to go to for the majority of the illiquid currencies. So again, if anybody wants any more information on that, we can definitely assist. And then we have an advanced liquidity program, which we can talk through as well. What I mentioned earlier about, the ability for single banks or singular banks to have a fast network of where they can hold, convert, and pay. Individual banks don't have the network because we have multiple banks and PSPs. We've been able to open our network to many different areas. And this allows us to service you as customers better. You don't have to worry about these kind of things. In addition to that, we're fairly open. So, if you as a customer came to us and said, look, I really need this account for this use case, it's something that we'd look at. If there's enough demand for that, obviously we'd prioritize that and start looking at how we can add that and partnering with various PSPs or banks to make that happen for you. But as you can see, there's a plethora of 50 currencies that we can service at the moment across the globe. And then in terms of FX and risk management, obviously you have a platform that you can log into. If you've got an upcoming payment in a specific currency and the exchange rate is where you want it to be today, you can convert that and hold that in your wallet, upfront and keep that. It's up to you. It really puts the power in your sort of fingertips, and the platform is super user friendly. It's designed for speed, ease, and efficiency. for CFOs, financial directors, and their inputters. And we have an approval layer. So if you're going to make a payment or do a transaction and you've got, let's say, juniors working on your team, you can give them authority to execute, but you or someone you designate can approve those. And we've actually also just launched an app which has that feature in that. So if you're on the move and you get a call from, let's say, one of your subordinates to say, look, I've done this, you're not in the office, can you please approve this? You can just quickly log into your app, review the payment, or review whatever you need to review, and approve that in a few clicks. So very, very speedily and very convenient. And then lastly, around pay, we can pay out into many different areas. International payments are our bread and butter. We can do local payments, and we're adding to our network as we go. If you want to pay wallet to wallet within our ecosystem, and soon without our ecosystem, you can pay to people within the sort of realm that we operate in. We've recently launched a corporate card. So if any of your team want to go out and they need a card for a variety of different use cases, we can allocate that. And then lastly, payout links when you're looking to pay out and get beneficiary details. You can send out a link via text, email, WhatsApp, etc., and collect those beneficiary details in a secure way, which allows you to be paid or you to pay out. So coming to the end, I'm just again conscious of time. We have payout capabilities to 170 countries. I won't dwell on these too much, but you can see the numbers of countries in each of these tabs. And then lastly, and it would be remiss of me not to talk about it, is that compliance is at the heart of everything that we do. We get audited, as I mentioned, all the time from the regulators to the banks that we operate with, the PSPs, and then also just our customers, will want to understand what systems and controls we have in place to make sure that their monies are safe. And so, compliance is everything to us. It's probably the thing that we focus on the most. We're regulated and have licensing in the United Kingdom, in EMI through the FCA, in the EA, with the regulators in Europe. South Africa, we have our FSP license now and are partnered with an authorized dealer. And Kenya, we have licensing. Nigeria, we also have licensing. I don't know why we haven't put it on this particular sheet, but it's an important market for us. So we also operate well out of that territory. And then just final sort of slide, some of the companies that we operate with, and some of them, we put on because I think they're prevalent to the South African market: MTN, MultiChoice, Maersk, and then some more local sort of marketplaces and money remittance type businesses that I'm sure you've heard of. But some big clients using us to try and help them with their liquidity issues and payments. So that's it from myself at this point. I'm sure we will share these slides afterwards, and we can then move on to the panel discussion.
Thank you so much, Tim. That was really insightful. And you've already covered quite a bit of what I've asked what I planned to ask in my first question. But before we get there, I just wanted to remind everyone that we are going into the panel discussion now. So this is your last chance to ask those questions, those burning questions for Tim and Ola and Craig about cross-border payments that we will get to at the end of the session in the Q&A. In the meantime, Craig and Ola, do you have any questions or final feedback on that presentation, or are you ready to move on to the panel?
I'm happy to move on.
Happy to move on as well, none for me.
Awesome, that's great. So, Tim, you already touched on some of the challenges that South African CFOs face when it comes to cross-border payments, and largely around currency exchange volatility, regulatory environment, and the costs. Can you tell us a little bit more about that and how the challenges have evolved over time?
Yeah, I'd say, just going back to my points, obviously cost, speed, complexity, education, and access are the 5 key points that I mentioned. But I suppose it's really important to just talk about the volatility in the rand. I think that's one of the key factors. Obviously, the rand is depreciated significantly. I've worked in payments for, as I mentioned, 16 years, and our role is not to give advice in terms of where it's going to go. We can't do that. But at the same time, our role is to try and help CFOs try and protect themselves. And I think, there are a variety of different strategies that I think people can use, from hedging to averaging out their transactions. I think as a CFO in South Africa, to try and protect their balance sheet when you're an importer or an exporter is nigh impossible for a year out. It's quite tricky. But what you can do is you could have a treasury management strategy which allows you to predict that to the best of your ability and fill that with different areas, whether you're going to hedge certain amounts for certain periods, whether you're going to average out a percentage of your budget, and then whether you're going to take some sort of derivative product out for, let's say, the last 20% of your treasury management policy, I think is really important. So I think those are the key challenges that are faced. Verto obviously can help from the payment side and try and reduce the cost and complexity. And then there's some other areas that I think you could benefit from further thought in terms of how we move forward.
Thank you so much. And then, Craig, I'm going to move to you next because you are an FD who obviously has boots on the ground experience with all of this stuff. Is this similar to what you've experienced at Hatch Africa?
Yeah, it is. There's no doubt about it. All of those factors that Tim mentioned are what we are experiencing. And maybe just to add on to the one little piece that Tim mentioned there, in terms of costs, what many people don't realize is the soft costs that you end up paying in terms of time, frustrations, inefficiencies. The regulatory environment we sit with requires a lot of paperwork to be put together. We then submit it through to a bank, and if their people interpret some of the Reserve Bank regulations differently, they then come back and ask other questions or look for further documentation. That back and forth is really painful, and all of that adds to the ultimate cost mix. So yeah, we do experience that challenge on a regular basis.
Thanks. And Tim, you sort of spoke about the cost implications a lot, or you unpacked it quite a bit in your presentation, but what are the key factors contributing to the high cost associated with cross-border transactions? And how can modern fintech solutions like Verto address the issue?
Yeah, I think, just adding on off the back of what Craig mentioned, obviously, they're unfactored costs that you can't really predict. And Craig made a very good point there in terms of just the time of pulling together these documents and the complexity of the documents, how many people are involved in that process. That's one major cost. If I look at it from a pure payments professional standpoint, I think the costs are, as I mentioned, one is that the banks really want to make a profit and they have the monopoly. The second piece is just that there are many intermediary banks in that process. So because the banks have partnerships with some of these intermediaries, some of the clearing banks, etc., they have certain fees along the way. And I just go back to that point that I made about requesting or demanding a covered payment versus an uncovered payment, because that's a real interesting mix when you get to the end and your payment's sent to your supplier or whoever you're paying, and it's minus, let's say, $1,000 in dollars or euros or something, and you're like, well, what the hell? And you have to then go and try and figure out how you can top that up. The banks have the ability to do that, and it's a negotiation, and it's more for them to save money. And then just going back to the fact that banks have large back office teams, they've built up over hundreds of years, and they can't reduce their costs because it's incredibly difficult. The amount of transformation that will need to happen in the bank to reduce their overheads dictates that they have to charge the fees that they charge. And that's why, I mentioned the education piece and the access piece around fintechs, and the fact that, we are still sort of the new kids on the block, but we are regulated, and we do have in very, very many instances the exact same rules and regulations that the banks would have to face when it comes to cross-border. Maybe not in terms of holding currency or giving interest on balances and things like that, but in terms of cross-border, we definitely have the same rules and regulations. And so that just means that we can offer a cheaper service, a more nimble service, and your money is protected in the same way that it would be through a bank.
Thanks. And Craig, what are you doing to address these high costs?
Yeah, look, I guess we're in a relatively fortunate position. We've got a couple of factors that we take into account. The first is that we do our best to remain cash strong as a company. And cash strong enables you to have flexibility as to when you pay things. So if you're needing to convert money and you've got some flexibility with that, you can try, as Tim has mentioned, figure out if it's a reasonably decent exchange rate. No one can ever predict the perfect exchange rate to either pay away or receive funds, but you try and manage that as best as possible, which you can do if you're cash strong. The other thing is it depends on the size of your payments. As Tim mentions, there's a range of that percentage that the banks charge when they do the payments. So the larger your payments, the more you've got a little bit of room to try and negotiate. But as he says, it's still a very opaque position. You don't really get to see what the true numbers are there. You've got an estimate. You can look at apps with give you exchange rates, and you see what you get given. That's within range. So we try and accumulate as many payments as we can when we are doing that, so that we then got enough volume to be able to negotiate a slightly better rate. So yeah, those are the aspects that we do look at, see what we can do. And I guess maybe the final one is that we do have a dollar-based account, and when we receive funds, we keep it in the dollar-based account so that we've got that to pay away. And having different currency accounts, I think, is a key factor, so that you get away from some of that huge margin on the exchanging of the funds.
Thank you. That's great. Ola, I'm going to move to you next. Everyone, this is Ola. He is the CEO of Verto. I believe I've also introduced everyone sort of shoddily, but Tim Rudman is the COO of Verto, and Craig Sumption is the FD of Hatch Africa. If you are new, then these are the panelists speaking to you at the moment. Ola, how can fintech solutions adapt to the unique needs and requirements of different regions and currencies? Sorry.
Sure, thanks, and thanks for the introduction as well, Kayleen. And hi everyone, I'm Ola, and it's great to obviously be in a position to be a panelist at this session. And I think there's quite a few of you decision makers that are the sort of ideal customer profiles that we want to have as customers at Verto. So thanks for taking the time to be here. I think there's two things I will say that fintechs in a sense have used to adapt to the unique needs and requirements of different regions and currencies. And I'll probably just use two examples. So Craig just mentioned kind of the very, very tenuous nature of the exchange control requirements in South Africa and kind of the manual pieces of work they have to do from a documentation perspective. So I think that's a very interesting piece that is ripe for a fintech to come in and basically digitize that process. So when we think about South Africa and Verto as a market, obviously we've done a bit of homework. And one of the things that we would be building is a solution to just digitize that process for most of you on this webinar to be able to, move money out of the country, which is cross-border payment. So I think that's a solution a fintech can adopt, and we're going to be building that. And I think that's going to really take away a lot of the pain and the time it takes for you of your obviously daily work to be able to move money abroad. Another piece, which is also something we've done here at Verto, is there are different sort of currencies and regions that the currencies are actually very illiquid. And unfortunately, these are mostly African currencies. So a good example is the Nigerian naira or the Kenyan shillings, which is very, very kind of illiquid at the moment because there's not that much hard currency liquidity for the local ones. And what we've built is something called a marketplace. So as an example of a fintech creating a solution to adapt to unique needs. And rather than give businesses the ability to come on and buy FX at a spot rate and limit the amount of volume they can buy, which is really what happens in these markets because there's no liquidity, we've actually created a marketplace, which essentially means that you can go on there as a business and put a request for the volume of currency you want to buy and also indicate a rate. And then we have an algorithm that sort of matches you with businesses on the other side that maybe have that currency to sell and also have a view as to what rate they're happy to sell it at. And in that way, we're able to match buyers and sellers using sort of our infrastructure as a fintech. And also, most importantly, being sort of, in that case, the central counterparty. So you're working with one trusted party, which is Verto, guaranteeing that, you would be able to fulfill that rate, and also the volume that you've requested for will be filled as well. So I think those are two examples of how fintech solutions can adapt to unique needs and requirements of different regions and currencies.
That's wonderful. Thank you so much. Tim, to move back to you from a more operational perspective, could you elaborate on the role of automation and optimizing international payment processes and minimizing error delays?
Yeah, sure. I think it again goes back to the speed point that I made, is that, ultimately, if you don't change your processes, or if you have no will to change your processes, and the incumbents are, they sort of are happy with the status quo, there's no progress being made. And just sort of touching on what Ola mentioned, perhaps the third factor about a fintech is that we are absolutely laser focused on trying to improve efficiencies in almost all aspects of the market that we operate in. So payment speed is one of the key things, and we talk about STP quite a bit, and not just STP from a payments point of view, but STP through our whole customer journey. So from the moment that a customer is aware of a company like Verto, they register, we'd like to move them through automated compliance processes so that they're onboarded much quicker. Obviously, Ola mentioned that we're looking to try and do that with the documentation issue. From the exchange control point of view in South Africa, that's going to be our core focus, and core priority in the South African market now that we've entered that. But then all the way through to the payment process, finding out who are the quickest banks, what are the quickest rails, what times. There's certain cutoff times that banks have, and a strange nuance that I have personally is that if I do a consumer transaction before 9 a.m. in the morning, my money will arrive in my South African Discovery bank account today, as opposed to if I did that 1 minute past 9, it would come next day. So, what fintechs do is they figure out those sort of like cheat codes with the various banks, and then we program them into our systems to make sure that, we giving our customers, and then we also, we message them and we educate them on the fact that if you do this at this time, you can get your money same day. These are our cutoff times, and make sure that they just get the speed of process. The second thing is around those intermediary banks again, and the charges associated with them, is that we choose the best route. So we have, a routing, not algorithm, but a routing matrix, should I say, that chooses the speediest banks and the less cost intensive banks that we can get your funds to you as quickly as possible, or to your supplier as quickly as possible, or vice versa. If someone's paying you through our channels, then you get your money quicker, which allows you to manage your cash flow better. And those are the key things. The second thing is also that we're always looking at new rails. So, the incumbents, as I mentioned, we traditionally use incumbent rails, but at the same time, any new technology that comes into the fold, we'll be looking at with a keen eye to see if we can improve the process. So, there's always that focus on trying to make sure that we laser focus on making the customer experience better for yourself. And that is the better we can make that customer experience, it only serves to benefit ourselves as well, because the customers will recommend more clients to ourselves.
Thank you so much, Tim. Craig, I'm coming to you next, because I've already seen quite a couple of text questions pop up in the Q&A, and I think I'm going to sacrifice some of my own for our audience. So how are you ensuring security and compliance in a cross-border environment? And that's especially important with technology and fintech, I think.
Look, I guess, with the whole electronic banking mix, that security compliance has become a much bigger issue. Generally, when we have to pay someone as a new vendor or something, we do a lot of checks to make sure that we've got the correct information. When it comes to cross-border, I think we just double down on that. We just got to double check and make sure those accounts are correct, the routing's correct, confirm with some of the banks that that's what it is to enable the money to get there. And then we're always having to make sure that the money has been received in the foreign account. Paying money into Africa, as Tim says, there are delays. Sometimes it's taking 4 or 5 days before money lands in the foreign currency account. And we make sure that we are staying on top of that, confirming that the money has been received. If there's a hiccup, then we chase down with the bank very quickly to try and find out where the hiccup is. So the security of that aspect, I think, is critical. And I think, as Tim mentioned, 80% of the transactions are going through main banks at the moment. I think the more fintech companies become more established, more acceptable from a security perspective, the efficiency, the costs, they will start to take a lot of market share away. So, yeah, I think the security aspect is a key aspect. And fintech companies, as Tim was saying, they've got to make sure that they are looking after that aspect to lure customers away from the big banks.
Absolutely. And just from a CFO perspective, because obviously a lot of the people in the audience are either CFOs or finance professionals, how do you see the role of the CFO change, and finance professionals especially change, evolve in the context of cross-border payments and global transactions as the requirements from you change?
Well, I think new technology, new approaches like this from fintechs is a key factor in some of that change. I think everyone's got used to the normal banking approach and just having to comply with that, having to follow through with that. But the more there are options like this, the more CFOs can explore those options, find different solutions, find more cost-effective solutions, which ultimately is key. And as long as you're getting better efficiency at a better price, then people are going to be happy to do that. And I think that's the aspect of technology that CFOs always have to keep looking out for. See where you can find differences, make changes, and do things that are going to help the broader community by getting on and making those changes so that everyone has to become more efficient in the process. You force the big banks to consider their rates, their margins, their efficiency when you've got these sort of solutions around. And you've got to look at them and see what you can do.
Thank you so much. That was great. I'm going to move into some of the audience questions while we are here. Benjamin asked, do you have minimum transaction sizes or minimum monthly volumes? This is for Tim or Ola.
Sure, I can take that. No, we don't. But obviously, our customers are businesses. We do typically see average transaction values in the thousands of dollars. So sometimes 30 to 50,000 is sort of the average that we see. But we don't have any minimum transaction values or monthly limits. So you can do as little as the equivalent of $10 in Rand if required.
Great, thank you, Benjamin. I hope that is good enough of an answer. If you haven't been answered accurately, or if we haven't gotten to your questions, please feel free to reach out to Ola and Tim at the end of the webinar. We will be sharing a replay of the video, some slides, and their contact information, so you can reach out. Marika also asked, how will countries such as Angola, which with restricted foreign currency trade, affect the use of Verto, and also South Africa being grey listed?
Yeah, sure. So we actually don't have the Angolan Kwanza as a currency that we offer at the moment. So we can pay into Angola, so essentially deliver US dollars into country, but we don't have the currency as one of the currencies that we trade on Verto. So not much of an effect on us or how businesses use us. And then with respect to South Africa being grey listed, I think that was quite unfortunate. But having said that, we are a global fintech regulated in the UK by the Financial Conduct Authority. So we adhere to very, very strict KYC and customer sort of screening protocols, which ensures that even though South Africa as a country might be grey listed, the customers that we have in country and that we service in country meet sort of world-class regulatory standards with respect to onboarding. We haven't seen any specific kind of effect with kind of our relationship with partners with the fact that South Africa got grey listed. So hopefully the grey listing by FATF sort of comes off in the next few iterations, but no particular effect at the moment for us.
Thank you so much. And then the last question I'm going to ask you is, how are you ensuring data security, and which regulatory policies do you adhere to?
Sure. Tim, do you want to take that?
So the question was data security and regulatory policies. So we have a guy, I'm going to go slightly off piece from the professional side. We have a guy called Milos in our team who's probably the most hardcore security analyst I think anybody's ever met. We are currently going through the ISO standard process. We meet all the regulatory requirements that we need to from the various regulators that we operate with at the moment from a security point of view. But again, we don't just set our standards at like what the minimum is. We obviously go above and beyond in terms of trying to make sure that our customer funds are safe, that that we do regular penetration testing on our websites and on our systems. We focus heavily on technology, and security is probably one of the key pieces within that because we're dealing with money. And so we follow all the various regulators and their requirements, but then again, like, we go over and above to try and satisfy the security for our customers.
Thank you so much. Matebogo, I hope that answered your question, and everyone else that we answered yours successfully or thoroughly as well. Like I said, if you haven't been answered well enough yet, or you have more questions actually, please reach out to Ola or Tim and they will be able to answer your questions. Thank you so much everyone for joining. Tim, Ola, it's been a pleasure, and Craig, thank you so much for being a CFO representative from our community.
Thank you very much.
Thanks, Kaylin, and thanks to everyone for joining as well.
Thanks, guys. Bye.
Thanks, everyone. Bye.